I hate the markets. I really do. I thought, right, I've learned something new today, so I'm going to like absolutely smash it. And then the market just did something completely different. And then obviously once the market's done it and you revisit your idea and you take on that information, you look through it for a different lens, you go, yeah, of course. That's exactly what they were going to do today. And that's exactly what they did. And I didn't, I had like every time I think I haven't got my bias, the market goes, oh yeah, you definitely had a bias. And you just didn't react. It's like, oh, shit. Look at this, 121 pips in the green.
Nice wins. I thought you were at profit by now.
No,
no, but what's your, as in your take profit or your
200 pips? So
200. Like, chunky. In saying that, yeah, it's looking pretty weak, isn't it?
I'm supposed to be the intraday guy, and yet I went on the daily chart and thought, that looks like a bearish candle. That's going to just absolutely fall out of bed. And it did. And then it kind of didn't. Just like, I understand what's going on with the dollar. I thought the dollar was going up.
I just think last week that action at near the end of the week that stood out like a sore thumb. To me, that's always the kind of thing that everyone gets excited and think there's a massive change of pace coming in, that it's going to go completely opposite way, and the dollar is going to rocket higher, and then it just pisses about and does nothing for weeks because it's kind of put in this big range that it needs to then just play about in, and before it makes up its mind, and everyone just gets chopped up.
So as the intraday trader, I still think it looks like it is going to go higher. It's above Friday's high. It just hasn't really done anything yet. So do you think, like you say, if I just share my screen again. You can share your screen at any time as well, by the way.
Yeah, I've got nothing too exciting to look at just now.
But I was just thinking, like, if this was Friday's range, like that one there, we basically just like held the top of it. And obviously, like, I normally think a rising channel breaks the opposite way. So I'm thinking it breaks down and comes down to the middle of the Friday's range, because it didn't like zoom off up to like 92 as I thought it might. But do you think it's like fundamentally changed in any way? I mean, I can't see anything that's made it change dramatically.
No, it's just well, how long's the dollar been going down now? How many weeks?
Weeks. I went on one chart and I got it back to like 1970 or something. And it's been going down for quite a while.
Yeah, no, that's a very fair enough point, because you know how last year everyone, like before the March top was put in, everyone was like, there's going to be a massive crunch with the dollar and all this, like it's going to rocket high and everything like that. But then you look at the longer term charts and you realize that the dollar has just been going in a downtrend for decades and decades.
Yeah.
So it's mad when people look at shorter time frames and they're like, oh, this is going to put so much stress on the system. And you're like, well, it's been way higher than this.
Yeah.
20 years ago, 30 years ago.
Yeah, definitely. But then, I guess we're all living in the most recent times, like post 2008. I guess that's like when most people sort of start thinking, oh, things change then, and we're still in that sort of regime.
Yeah.
But
if you know, I'm from March last year. So basically, it's been going down for an entire year, pretty heavily. Yeah. So it shouldn't be too surprising if we get a decent retracement in the next little while. I don't think that's anything. Nothing needs to change fundamentally. It's just that it's a good thing for the monetary system that, like, if the dollar kind of started crashing down from here another like 10% or something, then that's just as bad for the stock market as it crashing up.
Yeah. You don't think it's going to go and test like any part of this range from, like you say, like March high? Because kind of feels like it's doing something.
Yeah. Maybe back up to like 95 or something like that.
Yeah. Okay. Yeah. So that makes sense.
Which would bring Euro USD down to about like 1.16.
So I've got a chance then of getting to my 200 pips. So ridiculous. Like I did like a quick back test, and the amount of 25 pips to 50 pips I could have made, it's like, oh God. But it was because of one of the questions. Actually, do you want to talk about what you've done recently? What have you done?
What have I done? I made a nice little trade on S&P on Friday, which has obviously played out quite nicely.
But that's not on the Intex.
Oh, sorry. Yes, I know. I need to start concentrating a bit more on Intex.
I mean, no, you don't. I think the idea I'm trying to convey to everyone that I speak to is that, yeah, if you're going to trade your own account, do that, and then just every now and then look to put in a trade on the Intex. You know,
yeah. What have I got coming up? I don't know. Well, it didn't really do what I wanted it to do. I suppose very quickly, because sometimes I'm not great at explaining myself. I'll show the thing that I spoke about in the primer that I was.
Yeah.
It was quite a nice setup, but then it never actually happened in the end anyway.
Yeah, I noticed you put that note in saying these are invalid now. So that's kind
of... but that's kind of why I quite like it. Can you see my desktop?
I can't yet, no.
Yeah.
Maybe I'm looking at the wrong place. Hang on. I'm probably looking at the wrong thing.
Screen.
Yeah, like I said, I'm probably looking at the wrong thing. No, I can see me. Try and sharing again. Oh, here it comes. Yeah, I can see it.
Yeah. So where was I? This was a bit frustrating, actually. This is USD yen, and I bought this around about here. I think actually it was a trade we took in the Slack room, and then I closed out up here, feeling quite nice about myself for closing out just at this key little area that it hit off of, and then obviously it came down, but then it's way higher now, so I should have just held on to it.
Yeah.
But to start the month, so what, and I'll go into the Aussie chart in a second as well. What I was looking for here was for the momentum of like Friday, when it was really strong for US dollar and really bearish for commodity currencies, to push USD yen higher without ever testing down lower, like it actually has done, sadly anyway, because it's like a really simple and obvious trade. But if you look at monthly candles, it's extremely rare for months to not test like into the previous price action at all.
Yeah.
So you can actually get some really nice strong trades off of that one little idea. And so odd USD is interesting. So what I was actually wanting on this one to do was the opposite, was that it carries on down, because on Friday it like came right from up there. So it carries on down lower and then gives you a chance to buy for it to go up and test into the previous month's price range. So a really simple trade idea. Sadly didn't work out, but it's worth keeping an eye out for those kind of things. I can take all this rubbish off now because the trade never worked out. But the interesting thing then for now on odd USD, and which is the same with the New Zealand dollar and I think CAD as well, is that it's done kind of the opposite. It has, so it's not tested at all down into this range for the month. It's just, so there's no, so again, if we go back onto the monthly candles, you can see how like it pretty much like never just fires off like this. Once in a blue moon, it might do it. And so it might be this time around, but the fact that it's done this and not tested lower on a bunch of different pairs means that, especially as I was going into this week thinking this is going to be a range that's put in with this big move here. There's no change of trend just now, but I bet you it kind of plays around in this range. So it means that some nice shorter term reversion to the mean trades should work out, especially because it's not tested low here. So I reckon now it's probably going to kind of scooch up here and maybe give a short around about this area. So that's kind of what I'm waiting for, really.
No, definitely.
That's about it. as I'm sharing, just because I think it's so many FX traders just concentrate on Forex pairs. And yeah, obviously you need to get to know them, but you really need to know what's going on in the rest of the market. So obviously equities did really well today. So this is the kind of thing that you're like, well, if this is going to go screaming higher, then is my idea of commodity currencies going into a range, is that weakens that idea, doesn't it? So maybe I want to take slightly less risk if this goes screaming higher. However, I'll be really interested to see what happens back at the highs. And then if you then combine that, so again, if you were just looking at this and commodity currencies today, you'd think, wow, the market's screaming higher. We've got OPEC this week, and obviously now you've got oil looking really weak here, 2% down day, complete divergence to all the equity space today. So this is important to see what happens after through OPEC.
Yeah, did you see that? I think like Reuters and OPEC or some sort of survey had said that Saudi had reduced output by, but they just reduced output. So that's the bit I heard. And then, price came down. I thought, it's a bit odd.
Well, last week there was something, I think actually it was when it hit 60 that the Saudis came out and said that they were going to start producing more because the world economy is recovering better than they thought it would, which was the initial kind of top put in for oil, but it's obviously been pushing higher. But that looks pretty weak, doesn't it? Like, it'll be interesting to see what that does.
Yeah. No, I had more of an idea on the Aussie pairs, like you said, with the breakout candles, like how, you notice that they dipped down and retested, but this just looks like anything that's been pushing higher. Now they've tested below, tomorrow, it's a daily chart, isn't it? Yeah. So tomorrow needs to be an up day. Otherwise, this is going to start testing all the swing lows below.
Start looking really weak there. Yeah. Copper as well is put in a top, and this should be the bottom now, and it should start ranging as well, and that will help the commodity currency range trades as well.
Yeah, that trade there where they do the sort of swing high, and then this candle, like today's candle, goes up, tests one of the wicks or like the tails of a candle, and then like comes back down. That looks very bearish.
Yeah. But we'll see. But yeah, I don't know. What about you? Have you got anything that you're sitting about to pounce on? I've got nothing right now, sadly.
Going by my Intex markets performance, I was trying to sell pound dollar and Aussie dollar because I thought this dollar move was going to happen earlier last week. But obviously, if we go to the pound, I was trying to do this move too early. I seem to have the right idea, but I don't wait for the signal. I just, because I've got the idea, I take the trade thinking I'm being clever. But yeah, once I switched around and then took the Aussie short, that was a really good trade. Obviously intraday. I almost nailed it, to be honest. I was very happy with that one. The best trade so far that I've done is the GP yen. I basically waited for this high to be taken and then to collapse it below.
Nice.
And then retest. So that was good. But when it just like waterfall down, I was on my live account, like my own account, and I just thought, I thought it's going to retrace back up all of that there. So I closed out around here, but then it just, the worst part of it is it went another sort of deviation.
Yeah, although the first part of that trade is the one bit you want to catch.
Yeah, so that got my Intex account, back, to 40%. And if I can get this euro dollar to come in as well, that would be, because I'm at break even now. So having said that, the dollar going higher and the yen coming off is not what I thought the markets would be doing. I thought the yen would be going higher and the dollar would come off because I thought the bond market was signaling that people were going to move towards safe havens now. So that's kind of what I was saying to myself and other people over the weekend. And like I said, it hasn't come true. So Gonna have to rethink that one.
Well, the yield has been racing higher for US bonds, which should that's very correlated with strength in US dollar.
Yeah, because I've got here like bonds up, yields down. Obviously, bonds up. I expect dollar to go up, and then stocks to come down.
Yields up. You want, yeah. So this has changed, which is hilarious. So like, remember when, what was it? Was it 2019? I think it was 2019 when there was a lot of US-China tensions, and everyone was saying that you kind of the bond market or yields going down was being pointed to, and the stock market was kind of creeping up. But everyone was saying yields are going down, so stock market is going to follow that at some point soon.
Yeah,
and it did. So that's how that worked out during that period. Whereas now, because there's inflation scares, which I don't think there are, but that's what's being reported, now yields are going up, and that supposedly is making the stock market sell off.
Yeah, but you would have thought, like, if yields going up, interest rates are going up, that means everything is good, which means the stock market should go up. So obviously that's not happening. And today, dollar went up and the stock market went up.
Yeah.
So that was like when the dollar was a safe haven and everybody was running towards the dollar and to American assets. So is that what's happening today?
No. I think, again, that's why I thought that last week was just a fake out that would get everyone bearish, and it's actually rubbish. Because so the story was that the market's scared about inflation, and yes, a lot of things do quite well in inflation, and actually over 100-year period, stocks do okay in inflation as well. But what's leading the stock market right now and has been for about 20 years?
Just monetary policy and
what stocks?
Oh, stocks. Like I've got Microsoft and Apple, the ones I follow.
The big ones. So FANG are 20-something% of the S&P and 50% of NASDAQ.
Yeah.
Like a few individual stocks are a massive amount of the major indices. So when they go down, the indices will go down.
Yeah. But that's what I follow here. So like, I don't know if you can see it, but like on my watch list, I try and match it. So the US 100, which is like the CFD, if you like, of NASDAQ, because it updates a lot quicker than the NQ on this trading view. But so if that's green, I want to see Apple and Microsoft green, and I want to see yields coming off. Was it the way around? No, yields going up, bonds coming off. So yeah, it's all perfect. Yeah. Today is perfect. It's exactly how I want it.
But so last week, what kind of return are people expecting from like Microsoft and Apple and the big ones over the next few years, like percentage wise?
I don't know, but I did see that the yields and the 10-year yield and is it the S&P yield are matched. So I guess around 1.4 or not.
So a few percent. So these big stocks, they've risen so much, they're gonna crumble under their own weight effectively, or they might just sit at this level for might even be years.
Yeah.
And so the problem is that when inflation goes up and yields go up, then people who are sitting there like big pension funds and everything who are sitting there with a bunch of Apple stock are now thinking, well, hold on a minute, I've got a risk of this Apple stock that's only give me a few percent return every year. It could lose 50% of its value. And now I've got yields creeping up. And so I could move some of my money into this and get the same return, but they're not going to lose 50% of their value.
No, of course.
So that's why we're in a different regime than we were about a year and a half ago. And so a lot of money is coming out of these big tech stocks, which then just weighs on the market because the market is made up so much by these few stocks.
Yeah, no, it definitely felt like, well, for me, like, the NASDAQ sort of proxy is when Microsoft and Apple are both going up or down. That's kind of like they're going to drag a lot of the NASDAQ around, isn't it? And and listening to some people talk about that ARK Investments, where they've obviously done really well. Is it Cathie Wood? Mm-hmm. She's like picked all the good stocks of 2020, and now people are saying that she's overweight in the sort of the most risky sort of frothy stocks. So I can see, if people are starting to think, okay, everyone's done really well out of this, and now yields, like you say, are rising, it would make sense. If I had like the money, I would diversify and move out. But
exactly, but that's what that's almost the news story, and that's what happened on Friday. But I think it's like a load of rubbish for now anyway. All the central banks have said since about like last September, October, we expect a bounce in inflation pressures as we go into the new year because of supply chain constrictions and all this kind of stuff. And it's happening exactly the way they said they expected it. They said, we're not going to change anything of the outlook. This is going to be for a few months, and then inflation is going to go away, and then we're going to struggle to get it back near the end of 2021. So that's all just happening as expected. So I think when you then look at the action of last week and you just think, oh, this is just like, it's not going to hold. It's just
I could get the inflation coming from energy, like with oil prices going up, and the restriction of goods being moved around. So if there was demand but the supply couldn't get to them, then that would rise the inflation there. Food inflation, there's obviously quite a lot of food inflation. But then somebody was sort of talking about the input and output prices of manufacturing in the US. I think it was last week they were showing that. And they were saying that the input prices are going up, but the factories aren't able to pass that higher price on to the consumer because the consumer's unable to, there's like 700,000 people unemployed each week, and growing. So there's like less dollars out there to buy more expensive products. And also, if people aren't driving around, maybe that's why we had like the Indian energy minister, I think, when OPEC was talking that first time, saying, these higher prices in oil are not going to be sustainable because people aren't able to purchase expensive oil. The world's still in a critical place. So it would be interesting, like you say, if all the inflation story about yields going up is mitigated by the reality of people not actually being able to physically pay for higher prices on all of this stuff.
Yeah. And on top of that as well, with yields, it's a lot about the rate of change. And yes, they have moved a decent little chunk over the last few weeks, but actually they're still not even up to their like January 2020 level.
No.
So like they're kicking about just underneath it. And if you look at the rate of change, January, February, March 2020 compared to what's happened in the last week or so, like it's like there's nothing. It's incomparable. So like
when we first started talking, do you remember like we were like talking about I'm not saying first started talking about, like when we first met, we were sort of talking about yields at 3%. It's crazy that it came all the way back down to like zero almost.
Yeah. And so, now apparently the market's scared of inflationary pressures when it's at like,
because I don't remember there being much inflation when it was 3%. Like when these
exactly,
it's like this is like crazy talk. Okay, cool. Talking about crazy talk, the main subject last week was traders in Intex trading around the 10 p.m. cutoff time for when the markets go into a rollover and into the Asia Pac session, and the spreads widening. I kept an eye on a few spreads on my other trading, and I did notice that the New Zealand dollar versus the pound or the USD, the yen pairs, you could easily see 17 pips in the sort of spread there. Did you get to see any spreads yourself? Like, did you do any research into that?
I know I said that I was going to actually have a deep look into it, but I didn't.
Yeah.
But yeah, I mean, it's a really frustrating part of trading, especially if you're going to be holding trades overnight. And I got the impression, I don't know, but it seemed like some people were putting trades on around about that 10 o'clock time, probably because they're getting the signal from the daily close.
Yeah.
So then they're just wanting to get the trade on.
It makes sense. Like, but if you're doing a daily close, you're on a daily candle, you would have thought, and then
you get wider.
Yeah, you get wider. Yeah.
So yeah, it's something that you've got to factor into it. For like euro for really liquid pairs, it shouldn't really most of the time go above what, like 10, 11 pips increase spread over that the 10 o'clock area.
Yeah, I think for
But
euro dollar, you'd hope it would be like 5 pips, because if it's like
yeah.
half a pip to 2 pips on, well, 2 pips is kind of quite large. You know, that's a kind of a big spread for euro dollar nowadays. It's normally about half, isn't it, or zero
Yeah,
across some.
so it shouldn't be a fit. But as you said, with like yen pairs and stuff, then you're gonna get kicked off sometimes if you put in a stop of 25 pips, and you're actually really only putting in a stop then of what, like 4 or 5 pips.
Yeah.
If you take into account the widening spread. And yeah, I've been kicked out of some really good trades over the years, especially with Swissy as well, because it's often doesn't actually trade and like doesn't have a wide range anyway. So you think that you're choosing a daily range of whatever 20 pips or something, and that's enough. But then actually they increase the spread on it at 10 o'clock to about 16 pips, and then you get cut out, even though you've pretty much given a full day's range.
Yeah.
For your
No,
stop.
I think it's definitely like the New Zealand dollar. That seems to be one of the most illiquid markets, like thin markets. Swissy and yen. Just for it's, I think it's for like about half an hour to an hour a lot of the time.
Yeah. So then, what's your? Do you do intraday? Like, do you ever deal with this or have to deal with the problem?
NFP and tier one things like that, FOMC. Whenever you see like the market go like super quiet, like 20 minutes, well, an hour to 20 minutes before the actual news event, that's when you start seeing, well, you can like watch the algos just basically turn off as well. You know, there's like software out there that tracks the volume, and you can see how the volume just disappears a few minutes before. And that's when like, yeah, the spread's widening as the market makers and brokers look for liquidity, I guess, for all of our stops. And I think it's NFP and those type of FOMC tier one news releases.
And so do you? So I mean, NFP's coming up on Friday. Do you just not trade on Friday, or what's your?
I've got to the point now where I wait for the first hour of trading, so I get that hour range from the start of the futures. So I kind of miss NFP. I think I've been done too many times on NFP, and recently NFP is a 5-minute candle, whereas I think like say 2016 it would like move 100 pips after the news. So it'd be actually worth trading. I remember like someone, it would be on like YouTube or Twitter, describing how NFP looks now, and it is literally the same a year later. It goes up, it goes down, it goes back to where it started, and then it goes sideways. So it's just like it's one of the most boring, most talked about news events ever. It's like it's almost like harking back to the good old days of the big rip into like the London close. It just doesn't seem to happen anymore. But yeah, maybe it'll come back when there's actually some employment. I think the wages are dictating the direction more than, you know, if the average wage is good, then the US dollar seems to get a bid. But yeah, I did try on one of the accounts. I did have a little bit of a scare around an NFP and decided not to trade with them on it because their whole website just closes down almost. It just comes to a grind to a halt. So if you've closed out, you don't actually, it doesn't show up on the actual system. And I was like giving them the text messages saying, did my order go through? And they're like, yeah, it'll be fine. And then, yeah, the system updates. So I just said to them, look, I won't trade during the NFP anymore. It's fine. But yeah, no, it's fine. I don't think there's any need. It's always better for me to wait for the news to come out and then trade after that. So, and yeah.
So I think, that's definitely one thing. And then the other thing is that 10 o'clock, if you're somebody wanting to put on a trade bang on 10 o'clock, that's a tough one, isn't it? What do you do?
No, I think you can get your trade on still before say 7 a.m., 8 a.m. It doesn't generally move a lot between 10 and 8 in terms of pips. And it would definitely be equivalent to if you put, say, a 50 pip stop on, the market's not going to move probably 50 pips in the Asia Pac session. So you might as well wait a little bit longer and then just put a smaller stop loss in if you can. I would have thought, or just use the daily like I'm on and have 120 pips in the green and still not hit your target. It's actually ridiculous.
Yeah. Yeah, it is a really tough one because I think people do a lot of back testing, and you can't take the spread really into account unless you're extremely meticulous and you look at the timing of when you would get into a certain trade during your back test and you add your 20 pips or whatever that you would add on normally.
Yeah.
So that is a tough one. But I think that the main thing I suppose to say is that, the spreads are always going to, whatever liquidity provider you're using, the spreads are always going to be wider around about the 10 o'clock time. So you have to adapt your plan for that.
Cool. All right. We probably best leave it on that little educational note. And
nice.
Last half hour of trading in the futures, when everybody actually seems to do the trades. They wait all day and then they just get in the last 10 minutes. It's ridiculous.